Next, net profit before tax and extraordinary items. It is a starting point for calculating cash flow from operating activity. Calculation of net profit before tax and extraordinary items. First amount is the difference between closing balance and opening balance of surplus. Or closing balance and opening balance of surplus. That is the difference between current year's profit and previous year's profit. Amount is calculated by deducting previous year's profit from current year's profit. Then amounts that is to be added includes dividend paid, interim dividend paid, transfer to reserve, provision for tax, extraordinary items deducted from profit. Then items deducted includes refund of income tax and extraordinary items. Profit before tax and extraordinary items is the amount after adjustment. Question: from the following information relating to year entered 31st March 2020, calculate net profit before tax and extraordinary items. Surplus, that is balance in statement of profit and loss, opening 2 lakhs. Then surplus, that is balance in statement of profit and loss, closing 6,72,000. Then transfer to debenture redemption reserve 2 lakh. Proposed dividend for the previous years ended 31st March 2019 1,80,000. Interim dividend 1,44,000. Provision for tax made during the current year 2 lakh. Income tax paid 2,16,000. Calculation of net profit before tax and extraordinary items. First amount is the difference between previous year's profit and current year's profit. Current year's profit is 6,72,000 and previous year's profit is rupees 2 lakh. Difference rupees 4,72,000 is the profit made during the year. Then which are the amounts that is to be added to the difference of closing balance and opening balance? Dividend, proposed dividend, interim dividend, transfer to reserve, provision for tax and extraordinary items. In this question, transfer to debenture redemption reserve is given, proposed dividend is given, interim dividend is given, provision for tax is given. So add all these items to the difference of 4,72,000. First, transfer to debenture redemption reserve rupees 2 lakh. Then proposed dividend 1,80,000. Interim dividend 1,44,000. Provision for tax rupees 2 lakh. Net amount after adjustment is 11,96,000. One more tax is given in the question, that is income tax paid. That is the tax that is to be deducted from cash generated from operations at the end of operating activity. In this case, in this question, we need only provision for taxation. For the purpose of calculating net profit before tax and extraordinary items, the tax required is provision for tax. Next question. From the following information, calculate net profit before tax and extraordinary items. Surplus, that is balance in statement of profit and loss, 50,000. Then balance statement of profit and loss, closing 1,18,000. Dividend paid 36,000. Interim dividend paid 45,000. Transfer to reserve 50,000. Provision for tax made during the current year 75,000. Refund of tax 1,500. Loss of inventory due to fire 1 lakh. Insurance claim received for the above loss 50,000. Calculation of net profit before tax and extraordinary items. First, take the difference between previous year's profit and current year's profit. Current year's profit is 1,18,000. Previous year's profit rupees 50,000. Difference rupees 68,000 is the profit made during the year. Then next item, third item is dividend paid. Add rupees 36,000 with the difference of rupees 68,000. Then interim dividend 45,000. Then transfer to reserve, provision for tax rupees 75,000. Oh, add all these items with the difference of rupees 68,000. Then less a refund of tax. Refund of tax is given rupees 1,500. Then loss of inventory due to fire. Loss of inventory due to fire is an extraordinary loss. Add this loss with the difference amount of rupees 68,000. Then less extraordinary income credited to the statement of profit and loss. In this question, the extraordinary income credited is rupees 50,000. So deduct rupees 50,000. Net profit before tax and extraordinary items 3,22,500. Next question, from the following information, calculate net profit before tax and extraordinary items. Surplus, that is balance in statement of profit and loss, rupees 1 lakh, which is given in brackets. That means it's a loss. It is a loss. Then surplus, that is balance in statement of profit and loss, closing 3,36,000. Dividend proposed 72,000. Interim dividend 90,000. Transfer to reserve 1 lakh. Provision for tax 1,50,000. Refund of tax 3,000. Loss of inventory due to fire 2 lakh. Insurance claim received for loss due to fire 1 lakh. First amount is the difference between previous year's profit and current year's profit. Current year's profit is 3,36,000 and previous year's profit. Previous year they had incurred a loss of rupees 1 lakh. Difference 3,36,000 minus 1 lakh. 3,36,000 minus 1 lakh. So net profit made during the year is 4,36,000. Then add dividend paid, interim dividend paid, transfer to reserve, provision for tax, less a refund of tax, add extraordinary loss of rupees 2 lakh, less extraordinary income of rupees 1 lakh. Net profit before tax and extraordinary items 9,45,000.